Let's look at two examples of double entry recording in the GFS framework. In the first example, a household pays $7,345 in income tax to the government. This payment is a credit entry under revenue, specifically taxes on income, profits, and capital gains. The counterpart debit entry is the cash received under net acquisition of financial assets, specifically currency and deposits. In other words, the tax received by the government leads to both an increase in revenue and in financial assets. The entries we just made lead to an increase in the net operating balance equal to the increase in revenue because there are no expense transactions. The entries also result in an increase in net lending, net borrowing of $7,345 because the net investment in non-financial assets and the net incurrence of liabilities are zero. In the second example, the government pays $21,908 in salaries to its employees. This payment is a debit entry under expense in compensation of employees. The counterpart credit entry is under net acquisition of financial assets in currency and deposits. In other words, the government payments to staff lead to an increase in expense paid by the government and an equal decrease in net acquisition of financial assets. The entries we just made lead to a decrease in the net operating balance equal to the increase in expense because there are no revenue transactions. As in the first example, the entries result in a change to the net lending, net borrowing, but this time it is a decrease of $21,908 because the net investment in non-financial assets and the net incurrence of liabilities are zero.